it seems Bitcoin yield is one of the top conversations and top areas of interest in Bitcoin. Through the people that I talk to in the institutional space, especially with treasury companies now, because they're sitting on mountains of Bitcoin and trying to trade above NAV, and that kind of inherently requires yield.
Nice. So it gives like a stable yield portfolio for the investors, real Bitcoin yield from the ground source, the ground truth source.
I think Bitcoin yield is certainly important. Also, from a reserve currency perspective, I think there are a lot of economic reasons that if Bitcoin wants to be a truly global reserve currency that governments buy into, it should probably have the ability to generate yield.
Hello, everyone, and welcome back to the Bitcoin Economy Podcast. My guest today is a very special guest. His name is Suresh, and he leads the Mezzamine product over at Maestro Institutional. He's a very dear friend of mine, a brilliant thinker, and an expert on everything Bitcoin yield and Bitcoin mining related. So I think you guys are going to have a lot of fun in this conversation. You're going to learn a lot about Bitcoin mining and Bitcoin institutional yield. So without further ado, I hope you guys enjoy. What's going on in Bitcoin mining?
So I think there's an extreme pressure today to optimize and be very sophisticated. And they're now really sophisticated businesses, but that's not what it was always like. In the early days, mining was just people in their basements and their garages, college students in their dorm rooms. You could set it and forget it with with the early ASICs, and the network hash rate wasn't so high that you really could succeed and you could win blocks occasionally through that method. But then people realized that it could be a really strong business, especially as Bitcoin appreciates. And then we saw these public Bitcoin miners pump billions and billions of dollars into globally scaled infrastructure, full-fledged data centers just running ASICs, power purchase agreements, being able to optimize their energy costs. And now what we see is extreme centralization. So the top 20, 25 Bitcoin miners control 60 to 70% of the network hash rate, last I checked. And that only grows over time. As boom cycles occur, it becomes more expensive to mine because more people turn on ASICs. And when Bitcoin declines in value, then ASICs become less valuable because you end up being less profitable. And so at every point in the cycle, the big players eat up the market share and the small players get cut out. And so it's extremely important, I think, especially approaching the next halving in 2 years, for the mining economy to think about, how do we scalably finance infrastructure for Bitcoin miners? How does the Bitcoin network support Bitcoin miners so that we can create more decentralization pressures and stabilize the mining economy?
So right now, it's really hard for the small miners to be able to compete. So basically, big miners are getting economies of scale. They're becoming these massive publicly traded businesses, and it's changing from what Bitcoin used to be, where there were small guys who were able to run it, to now it's becoming this almost like corporate machine. But what you're saying is that's the antithesis of what Satoshi had in mind, and having this big decentralized network. Is this a huge problem for Bitcoin?
I think it is a theoretical large problem. I mean, if a handful of miners get too large, of course, that can result in you know collaboration between them, and that's problematic. But I think more than that being an existential threat, or at least a near-term existential threat to Bitcoin, I think the shocks of upcoming halvings are extremely worrisome. I mean, what happens if all of a sudden in the next halving, Bitcoin price isn't where it needs to be for miners to be profitable, and all of a sudden 40% of the network has to shut off hash rate because it's not profitable to mine anymore? I mean, I think those are the types of pressures where it's really important to think about, both from the miner's perspective, how do I create a business that is extremely insulated as possible from these markets when my entire revenue profile is so deeply tied to Bitcoin price and really is a reflection of Bitcoin price. But then also, in what we're building, how do we help the Bitcoin network be able to support Bitcoin miners by connecting idle Bitcoin that's seeking yield to foundational yield in the mining economy.
So so what are you building that's different, and how is this supposed to help smaller miners?
Yeah. So, and I would say, at Mezzamine, we're building a credit platform where Bitcoin holders, primarily initially institutional, but we have a vision of, any Bitcoin holder being able to connect a wallet and participate in these markets, can deploy idle Bitcoin into the mining economy through really institutionally structured um, investments through credit products, where effectively Bitcoin miners are able to access credit, they're able to access financing to be able to expand their hash rate. And in doing so, they're able to pay yield back to those investors by effectively allowing them to earn a portion of their future block rewards. Um, what are we doing that's different? I think we're much more than just a protocol. We really are a very institutionally structured credit product. We are allowing Bitcoin miners to not just have to put up a ton of Bitcoin for over collateralized loans, which becomes very unsustainable for a lot of the market because you just have limited amounts of Bitcoin to collateralize and can only pull a fraction of credit out of it. It also produces a lot of, currency risk because you can get margin calls in times like today, January 2025, when Bitcoin had quite a bit of a drawdown in the last couple of months. And ultimately, what they're looking for is more collateral efficient financing. How can they get financing without having to put up a ton of Bitcoin because there's such a cash flow intensive and high OpEx business? So our structured product allows them to Bitcoin miners to collateralize a combination of Bitcoin, ASICs, generators, power purchase agreements, all sorts of real world assets. And we employ a dynamic hedging model that we've built with some of the deepest experts in the space that were going through the cycles in 2022, went through the errors of mispricing collateral and seeing all those loans go bust. And we've effectively built a structured product that both allows us to deploy collateral efficient capital into the mining economy while also in an integrated fashion hedging every single program such that if Bitcoin price were to drop and or the halving occurs and all of these miners are being stressed from a profitability and margin perspective, our optimized Bitcoin short position can make up for those losses in most scenarios in back testing and in the simulations that we've run.
So miners are able to get financing, and this is going to be in a type of financing that they can't currently get. So basically, this is based off of a projection of their future earning or future hash rate that they're going to be able to generate on new equipment that they purchase from these financing agreements. Is that right?
Yeah, that's right. They're basically, as the investor, you're getting paid back from future hash rate, which is an expanded amount of hash rate that they have from what they have today, but it's also backed by their existing operations. So at the end of the day, the lender is and the investor is backed by all of their existing assets and over collateralized by typically around 1.5%, sorry, 1.5x, 150% to be able to protect them in the worst case scenario. But in most scenarios, again, our structured product allows us to recoup potential default losses in Bitcoin bearish environments through that price hedging model.
So for the investor here, what's the investor getting?
The investor's getting big native Bitcoin yield produced by, newly minted Bitcoin. So every time their miners are winning block rewards, they're receiving their principal back plus interest on whatever schedule that they agree on with that miner. We have miners that are doing monthly payment schedules and distributions, and we also have models where literally every time they win a block, you get a portion of it. So it's really an open market where investors and miners can open and fund programs to be able to, transfer that value and create Bitcoin yield for the Bitcoin economy.
That's super interesting. So I know that back in 2020s, I forget exactly when. I think all came crashing down in 2022. There were some companies that were doing Bitcoin yield, like BlockFi, Celsius,
Yep.
and they were big businesses. Those were like multi-billion-dollar sort of behemoths that were skyrocketing. Um, but they went belly up, right?
Yep.
As we all know, that was an absolute disaster. So what's different with this program compared to them? And are people still looking for Bitcoin yield? Is that something that's important?
So I'll answer the simple question first. Definitely, it seems Bitcoin yield is one of the top conversations and top areas of interest in Bitcoin. Through the people that I talk to in the institutional space, especially with treasury companies now, because they're sitting on mountains of Bitcoin and trying to trade above NAV, and that kind of inherently requires yield, which we can talk about later. But I think Bitcoin yield is certainly important. Also, from a reserve currency perspective, I think there are a lot of economic reasons that if Bitcoin wants to be a like truly global reserve currency that governments buy into, it should probably have the ability to generate yield. And so I think it's very important from multiple perspectives. And then the other question about, you know, I guess kind of begs the question, why mining in general as foundational yield? I think it's really the only place that Bitcoin is produced. It's like the ground zero for producing new Bitcoin, and you could kind of consider it the foundation of velocity of money in Bitcoin is mining. Um, and if you even look at traditional banking, like back in the day in the U.S., the banking market was based effectively mostly the agricultural economy. It was farming, it was agriculture. That's why we still have farm and non-farm payroll as like key economic indicators, because it really has been and always will be like a bedrock of the U.S. economy. Now we obviously have much bigger markets these days, but financial services and credit, as we know it, kind of started out specifically in the agricultural, farm business, and that's kind of what mining is for Bitcoin. It's like the ground zero economy, and I think if we're successful at this, we'll see credit markets in a lot of other places in Bitcoin. So I think like that's why Bitcoin yield. And then speaking of 2022, there's a very specific, error that I think, well, not that, we worked with people from uh, those companies like Anchorage who had these loans and were on those quant desks to build our hedging models. And the error that was made was not considering the how closely tied the value of those real world asset collateral that they were collateralizing for these loans is tied to Bitcoin price. When Bitcoin price tanks, ASICs become inherently less valuable. So if you collateralized a loan at 130% ASICs and the value of the ASICs at that point, and then Bitcoin declined, well, those ASICs are going to decline in value at the end of the day as well. So when you go to recoup all of that collateral, you're actually sitting on less collateral than you put out in the loan, even though your LTV was initially good. Um, so I think that last collateral cycle really showed us that these are more than very basic, you know, basic loans and basic credit. There are very significant like structural impacts and structural exposures to Bitcoin price, and so you really have to take a deep diligence approach to assessing like what is this miner's electricity costs and at what Bitcoin price are they going to have stress. Um, and that's what we do to hedge down to that Bitcoin price, and why we do it at the program. Like every individual program has its own hedging setup for that reason. Does that make sense?
Yeah. So maybe could you dive into that a little bit more? So you're saying that there's like a price hedging model, and that's what sort of keeps this program different from the BlockFis and Celsius uh, of the world is there's downside protection based on Bitcoin price.
Yeah,
Um,
because what happened in 2022 is Bitcoin price tanked and all of those loans that those lenders were sitting on uh, were the miners were unable to pay those back because they were no longer profitable. They were no longer to run their operation at
Geez.
a decent margin. So all of those loans went belly up. But even double whammy, like that happens in lending, companies default. That's why you collateralize it. But the very collateral that was backing the loan was ASICs, which weren't valuable because mining wasn't profitable. So how do you protect investors from that? Well, you give them optimal exposure, short exposure to Bitcoin to hedge that scenario, which is what we do.
Okay, nice. So it gives like a stable yield portfolio for the investors, real Bitcoin yield from the ground source, the ground truth source, which is also funny that they name it like mining and farming. Crypto just like goes back to just like the basics of the world and the economy.
Yeah, you actually do a pretty good job of that.
Yeah. Uh,
Um,
how'd you guys come up with this business? It's like it's pretty complicated.
it started out naively simple, just seeing that there's a gap in by Bitcoin miners struggling to acquire financing outside of the top 10 or maybe like outside of the global and publicly traded ones. You know, it's very difficult, especially these days, because everybody looks at 2022 and is very scared of financing miners these days. So we just had, we're in Austin, Texas, and Texas is, I want to say like I won't guess, but more than 50%, I think, of the United States mining activities in West Texas. Um, we have a lot of friends in the mining business, and we had a lot of them talking about the fact that it was really difficult for them um, to procure financing. And then at the same time, we were seeing protocols like Babylon, blow up, where I think Babylon went from 20, 30 million to a couple billion TVL in a matter of 2 years or something. And so clearly Bitcoin yield and crypto yield were, um, extremely important. And I think kind of like we saw that as the next big evolution in Bitcoin is how do you generate that yield? And it seemed like a natural bridge. And then we realized it was a lot more complicated than we initially thought it was, and then worked with asset managers to build a structured product.
Classic, like any building any startup, you naively think you're like, oh, this would be so easy, and then the moment you start doing it, you're like, wow, this is way more complicated than I could have possibly thought.
Yeah, and then you're like one step away from accidentally building a hedge fund.
Yeah, exactly. Well, what do you think are some good lessons that you've learned about Bitcoin mining industry through this and through your journey so far?
I do think mining is like it's a super interesting business, and when you start to get into the intersection with energy, and like now you really do at scale because now mining companies are going into other countries. They're dealing with local governments in Paraguay and Ethiopia and trying to figure out like how do I get these PPAs? How do I deal with local corruption in these countries where I've heard some crazy stories that we probably can cover in another podcast about dealing with local governments and corruption for Bitcoin miners and entities coming in and just seizing hardware for no reason other than they can do that. But um, yeah, I think the intersection with energy and data centers, has already produced a lot of really just interesting intersections with global politics. And now we're kind of seeing this intersection with AI too. And I think there's a lot of Bitcoin miners are already thinking about how do they, supplement their fleets with AI. And in a lot of ways, it can be a pretty symbiotic business because AI has downtime when you're not in training and inference. And perhaps when you have idle GPUs, you could take that energy and put it into ASICs to, make money in the interim. And perhaps when Bitcoin price isn't as great, you can, stabilize your cash flows with GPUs. So I think that's another big inflection point we're going to see too. And I know a lot of the biggest Bitcoin miners are already have been looking at GPU expansions and retrofitting their data centers to support it.
One thing that I find really interesting about Bitcoin mining as opposed to, or Bitcoin as opposed to Ethereum, is just like the tie to energy and energy production. It's like there's a a real resource that has to be drawn on in order to produce it. So there's like a constraint variable. What do you think? What do you think is the next phase with Bitcoin mining with regards to energy? Is like, or is it going to go offshore, or are we going to start seeing more miners outside of the United States? Um, are we going to see more of it in the United States because of the current administration's policy? Like, where does it go from here?
I mean, outside of even just mining, certainly this administration has been good for, for the AI companies and for energy companies. And we're seeing like some of the biggest data center build outs. I think OpenAI is literally building one of the biggest data centers in the world in West Texas. And yeah, I mean, I think an interesting thing is, energy is the more the more utilization of energy expands for AI and for Bitcoin mining, and it's already rapidly expanding, the more important it becomes as a commodity. And maybe you even see things like states off in the US offering benefits to data centers who want to come, build out infrastructure in their state, so that they're not competing as much with other jurisdictions, and perhaps see the same thing on a country level, as energy just gets, more and more utilized for high compute activities, and especially naturally as it goes for Bitcoin mining, network hash rate always grows, and the faster network hash rate grows, the faster it has to grow for for the miners to keep up, right? So it is this like really insane flywheel, and it's definitely not slowing down.
So I guess let's go back to what you were saying a little bit about treasury companies. I feel like this was a new paradigm as well in 20 uh yeah, the really 2025 that we saw this explosion. Billions and billions of dollars raised across the board, across every geography, every country, every stock exchange was building a treasury company. Now, in the back half of 2025, or really fourth quarter and up through the beginning of the year 2026, treasury companies haven't been doing that well, and
Right.
their stock price is cratering, and their MNAVs are really less than one across the board. Can you tell us a little bit about what's happening with treasury companies and what they're going to need to do in the future to sustain operating? Frankly,
Yeah, I mean, I think in general, the best treasury companies will be the ones that figure out ways to accumulate below cost Bitcoin. So, like,
mm,
how can I get Bitcoin on my balance sheet at a discount? Um, One way, like we already see with American Bitcoin, for example, is mining. So, they're pairing mining with a treasury play, and it makes a lot of sense because as a Bitcoin miner, they're able to acquire below cost, or below market Bitcoin. If you're just buying Bitcoin at spot, I feel it's going to be really difficult for you to maintain that, you know, uh, favorable, tradable stock price on MNAV. But I mean, outside of mining, I'm sure there's a lot of other creative ways that treasury companies can figure out, how to do that. And perhaps even Mezzamine could be a way for them to do that because it at least allows them to, you know, take the Bitcoin that they have on their balance sheet and deploy it into long-term, like multi-year, fairly high yield generating assets. So I think like all these strategies from yield to how do I acquire Bitcoin are the things I would be thinking about if I was a treasury company.
So what are some other sources of Bitcoin yield? I feel like you're now a Bitcoin yield expert. What else is happening in the market?
I mean, there's a lot of, I mean, the probably the one I see a lot of is rehypothecation. I think it works
Is that
and it's good.
what is rehypothecation?
Take Bitcoin, draw LTV like US dollars against it and over collateralized loans, go stake those in other protocols. Or, we've seen a couple different protocols that do similar things. At the end of the day, they're similarly exposed to Bitcoin price. So we've seen some of those not do so well also. Um, but I think, that's been there for a while. And they're, normal trading based plays. You can acquire options on Bitcoin price and structure call options and put options to be able to make a spread and do it in a relatively safe way if you're good at that. That's not something that we do, but certainly could be something that we work with other players to do. And already know some asset managers that are doing that to try to generate Bitcoin yield. Um, and I think things like that are good. People understand if you trade an asset that there's inherent risk, and if you're good at it, then you'll make money, and if you're bad, then you might lose some money. I think what we have to stop telling ourselves in the Bitcoin space is that there's this like risk-free yield somewhere that we can get. Um, Ultimately, I think regardless of where you're deploying funds, like even treasury bills have risk, like they have duration risk, they have inflation risk, they have risk of the US dollar as a reserve currency. Um, and everywhere you earn yield because you take a risk and it's mitigated. Um, so I think just to avoid more of these, scenarios where people are putting their capital into various protocols that are doing things and saying that it's risk free and people don't quite understand what's going on under the hood and they blow up. Um, I think these I think these companies should be very clear about how they generate yield, what the risks are, and I think that's going to be a big inflection point for Bitcoin yield in general. And it's something that the community needs. I think is some transparency into how do these things work and what's my downside.
Yeah, couldn't agree more. I think that's just a problem with crypto in general right now is it's this amazing technology, but it's so confusing. Even for people who are deep in it,
Right.
it's still confusing and complicated. So like a semblance of
Yeah,
trans
and usability too to that point
yeah,
because people don't want to manage these rails themselves. How much can you abstract those away so that you can make it simple, but without creating more risks you know, in what's going on between the investment and where the yield's coming from. So, that's why I think like our business is pretty simple because everything's always denominated in Bitcoin. The investor doesn't care what Bitcoin price is. The miner doesn't really care what Bitcoin price is because they're denominated. Well, the miner cares from perspective of operating margins, but they don't from a perspective of if it goes up or down throughout the duration of the loan. Neither of them are exposed, right?
yeah,
Um, so that yeah, I think that's when you start talking about rehypothecating through other currencies. Technically, you could say it's principal protected, but is there some sort of black swan event that can cause it to go bad? And I feel like usually there's
yeah,
something somewhere.
for sure. I that's one of the coolest parts of working in Bitcoin and working in the crypto industry is seeing things denominated in a different currency. I think living in the United States, we're so used to the dollar being pervasive everywhere that it's almost foreign to say, oh, we're denominating something in Bitcoin, Bitcoin in, Bitcoin out, etc. Other countries have to do it, but for the dollar, we're privileged and we don't. So
Right.
that's been cool.
There's also an interesting thing from a perspective of, the economics concept, velocity of money. That's like how many dollars, if you put a dollar into the banking system, how many dollars come out. Um, and it's more than $1. And in the US dollar, that's because you can ultimately like you can print more dollars and it creates inflation. But velocity of money is a dollar that goes into the banking system, more comes out. But that's kind of the opposite in Bitcoin. You can't print more Bitcoin, so it's deflationary and if everything were denominated in Bitcoin, then everything would just get cheaper over time. And that would be velocity of money for Bitcoin, is products would get cheaper.
Yeah.
When all the Bitcoin's mined and there's no more, and if everybody's using Bitcoin, I don't know that that actually will happen one day. It's an interesting thought experiment, though.
Yeah, for sure. Well, I guess looking ahead, what conversations or developments should people expect from you in the future or in the near term?
We have our first program going live for a US miner in the next couple of weeks. It's small, it's around 10 Bitcoin, but it's really a huge milestone. And it's a way to prove out that you can generate Bitcoin yield through our product structure. It's safe. We have some very large, like multi-billion dollar institutions behind it that we're expecting to do several more and very large, get into some very large deals with public companies in the range of $100 million, US dollar equivalent, all funded in Bitcoin, all going to institutional Bitcoin miners and generating Bitcoin yield for the investors. And so I think like the next couple of weeks and months, just see more, look out for those updates and who we're partnering with there. And yeah, anybody who's interested in Bitcoin yield can reach out to us. We make it really easy to schedule a meeting on our website. Same thing for Bitcoin miners. We always like to talk to miners or even mining pools who are looking for financing as we build out our pipeline for this year.
Yeah, I was gonna ask, what's the best way to engage with you or reach out?
Yeah, so if you go to mezzamine.com/contact, we have a button there where you can go, schedule a meeting with our team on Calendly when we're available, or you can, reach out to us at the forum or at our email that we put on the website. Um, and yeah, like I said, anybody who's interested in financing from a mining perspective, we're even talking to some AI companies. So AI companies that are interested in financing have a similar challenge. When I say AI companies, I mean like data center, those running GPU facilities face similar financing constraints, and we're even exploring are there ways we can generate yield from that, though it's a little different because they earn in US dollars. But yeah, energy operators that are looking to implement mining and all, yeah, it make it really easy for us to, we made it easy for people to book with us on the website. So that's the best place.
Awesome. Well, cool. It's been a lot of fun talking with you, and I'm sure we'll run this back again soon once the programs go live.
Yeah, for sure. All right.
Awesome.
Good
Thanks,
chat.
Grace. See
Thanks,
ya.
man. Bye.